Officer of Hamilton Capital Partners. Thanks so much for being with us, Alonso. As you walked into your office this morning, you saw what was happening in the markets. What was your reaction?
Good morning. It's great to see you. Well, there is a heck of a lot going on. I think when I went to sleep at 10 or 11 last night, futures were down 2-3%. So this is a market where investors have to be patient. We know that President Trump is speaking with the presidents of Canada and Mexico today. And so there's a non-zero chance that some of this gets reversed or maybe a continuation. This is a market where we have to be really, really patient because we don't know how long this war is going to last.
So how are you approaching this? Have you been talking to any of your clients over the last 12 hours or so? What are the common questions that you're getting right now?
Sure. Well, the phone is ringing off the hook with clients that import products from Canada, Mexico, and China asking how long this is going to last. And frankly, we just don't know. I think that the biggest impact that we could see is potentially inflationary pressures and also a drag to GDP. But the president is a negotiator. And so we're going to see how this plays out today going into tomorrow. I think investors have a little bit of optionality in this market. And one thing that's been very, very interesting is watching the long end of the Treasury curve move a little bit lower in terms of yields. So there's options for investors to maybe pull some of those levers and be a little bit risk off, but it's certainly going to be an interesting market. We're going to watch this very, very closely.
I don't want to get too far off topic, but it is interesting that you are in an environment where some people think tariffs are inflationary, that people have been buying bonds today, but I guess that is just the safety reality of the market we're in right now.
Well, a little bit of a safety trade. If you look at the equity index futures, deeply in the red, it's going to be a choppy market. And so I would say so. I think folks are looking for safety. I think you mentioned gold being at its all-time high or near its all-time high. And so investors are flocking anywhere that they can find safety. Obviously, there's strength in the dollar, and we're seeing some depreciation in global currencies. And so, again, part of that optionality, but investors are looking for that safety. They're going to watch and see how this plays out today and going into this week where, frankly, we have a lot of economic data, jobs data on Friday. We get ISM today and Thursday, durable goods on Wednesday. So there's a lot going on this week that investors need to digest and potentially make investment decisions with.
Alonso, we spoke with our guest last hour who said that on a day when there's so much uncertainty, sometimes the best thing to do is just to wait it out, take a deep breath and see how it all plays out. I guess the complicating factor is that for those people who had been hearing about all the tariff uncertainty for some time, you could look back and you could look at what the president has said and, from that perspective, even though you never know what he's going to do, he's been pretty consistent on this tariff narrative. And, I'm sure, some people have been watching the Canadian dollar get weaker, and now there's talk it could get even weaker. So what's the balancing act between just staying cool, waiting it out, seeing what happens, versus feeling like actually this is a moment where people have to start thinking about reevaluating where their dollars are going?
Well, that's a great point. I think we've always had the opinion that we have to take this administration at their word. And they've been talking about tariffs, frankly, for the last year and a half. And so this wasn't a huge shock. I think the market was caught a little bit off guard in terms of the actual implementation. But again, today, conversations could be had and potentially, there's a chance that there's a pullback on these tariffs on the U.S. side. So this is a moment for investors to gut check their investment strategy, gut check their risk tolerance. And for us, having a little bit of cash on the sidelines to be opportunistic as this market gyrates. Like I said, there's a little bit of optionality, but definitely today here at the firm, we're holding our breath and seeing what happens.
Okay, so give us a bit of your playbook because, there's all sorts of stocks that are under some pressure. We already talked about some of the companies that seem to be in the direct storm of tariffs, like auto stocks under some pressure this morning. But we're also seeing, because it's a risk-off kind of day, we have seen a lot of those high-flying technology stocks lose some momentum as well today. So as you're watching everything play out, where would you be opportunistic in the market?
Well, we've had a pretty brutal sell-off in technology over the last 4, 5, 6 trading days. And so being opportunistic with some of that cash on the sidelines to buy great names, specifically within the Max 7, whether it's Meta or Google or Microsoft, and adding to those names that have sold off just a little bit. I know Meta's done pretty nicely over the last 2 weeks and year to date. But this is a story today where the market, the directionality is just negative. There's bearish sentiment. Wall Street was caught a little bit off guard. And so looking out, in terms of opportunities, we think that a pullback in tech today presents an opportunity for investors that want to either plant a flag in the flag in the sand or if they have cash on the sidelines.
And how are you going to be, I know this is an impossible question, but how are you going to be able to determine if the tariff story is here to stay and then we have to do a really deep reset on what profit potential looks like? I only bring it up because, you've got all the Wall Street strategists trying to predict where we go from here. One of the headlines this morning comes from Goldman Sachs, where their key strategist says, don't be surprised if you see a potential 5% drop in stocks in the months ahead, because now you have to reevaluate what the profit impact from all of this stuff ends up being.
Well, I think it's a tough paradigm because we have all the fancy models to start to calculate what the impacts of tariffs are going to be, but we have a president that on a whim is potentially willing to change his mind, and so that wait and see and being able to have some cash ready to go and be tactical in this choppy market. I think the name of the game for the next 3 months is going to be volatility and being able to stomach that volatility, but also take advantage of pockets of weakness on days like today where potentially you start to see some opportunities in the market across different sectors.
All right. Well, good to get your perspective, Alonso, on a busy day. Alonso Munoz joining us.